Everything you see here is strictly informational. Forex is a high-risk business. Please do not place trades with more money than what you don't have. Please do not trade other people's money. Do not borrow any money than what you cannot trade with. And please take everything that I say as a personal opinion. I am not considered a financial advisor. I'm not considered a broker. I am just one here simply recording my journey along learning the markets.
What's up, guys? It is time. That time for Bodies and Wigs. It's been a long day. It is 12:57 a.m. and well, I guess it's not December 4th anymore because it's December 5th. When I made that opening little thing there, it was December 4th, but a little time has passed. I kind of gotten a little bit too in too much of a rabbit hole, and time goes by. Time goes by when things like that happen. This episode is brought to you by Nos. Oh, the sweet, sweet nectar of how gross that is. But lovably gross in a great way. Anyways, I'm Ted. I do Bodies and Wigs. And generally I go over charts and I tell you what I think is probably going to happen based on smart money theory. But today's going to be a little bit different. I've been, going over some different things on Barchart and looking into Bitcoin futures and seeing what people really think. Because last time I think I did one of these, I was looking into bar charts and I found that the usually in Forex, usually the commitment of traders is like a good example as to where the market is going to be heading, right? Because commercial traders or like commercial banks, things like that. And what I found out when I'm looking into this is basically anything that has a commercial position would be somebody that is directly related to the production of that commodity. So the example that it gave is a soybean farmer, would be a commercial a trader if they were growing soybeans and if they were to basically short the soybean for the following year, primarily because they knew for a fact that the soybean market was not going to be good, so that way it would offset their cash flow that would be coming in this year. So when it comes to currencies, it goes to, basically what happens is it goes to the commercials would be the people that are in control of the money supply. That would be the banks, right? Now with Bitcoin, it's a little bit different because the banks aren't in control of the money supply. So that was my false thinking. Whenever I first did that last video, and I said, well, the banks are involved. I can tell. Here's how I can tell is because there's commercials that have their money in this. No, commercials in the Bitcoin industry would be the people that farm Bitcoin, right? So the people that farm Bitcoin are actually involved in the futures, not nearly as much. Definitely not nearly as much, but they are involved in the Bitcoin industry, which is interesting that they're involved to a little bit of a degree. So I guess they probably can foresee how much Bitcoin they can produce in the future. Now, what's interesting is that usually, especially in the Forex market, is that the large speculators and the commitment traders, they're the ones that are almost diametrically opposed to the commercials, right? So they're the ones that are just guessing wrong all the time. The hedge fund managers, I'm sure they're right. They're probably good for the short term aspect, but for the long term, I guess they don't foresee what's coming as to where the commercials, they see what's coming, so they start shorting and logging well before the turn starts to happen. So they're in a good position. When they start adding their longs, it's when it's going down. Whenever most people would be adding shorts, right? So longs mean going up, shorts means going down, things like that. So whenever I started looking into these Bitcoin futures, some things kind of surprised me, I guess you could say. So I kind of want to jump over to the charts to kind of to check it out here for a second. So first, what I'm looking at here is the Bitcoin futures. This is the list of them, right? So here in December, over here you have what is your open interest. Your open interest here, it shows the total number of open option contracts, right? So option contracts, meaning if they're betting, right? They're betting on if it's going to go up or down. That's what futures are. It's kind of like, well, if you don't know what options are, I suggest you probably look into it. I can't explain it in one video. There's tons of videos out there about options. But basically you're saying that you believe it's going to hit a certain price. Once it's a certain price, you're at break even. If you're at a call, if it goes above that that strike price, and you make money. If you're in a put option and you hit that strike price and it goes below, then you're making money. So you can sell, right? And you can buy, basically. You're buying the call, or you're selling the put, I believe is how it works. You can sell a call and buy a put, but those are really odd ways to get into options, and they can really basically just run your bank into the negative if you're not really knowing how to play with it. From my understanding, I'm not too huge on options, but I do get the primary gist of them. But what I found was interesting was, okay, so these are the main ones. So let's go over to, let's see here. These are the Bitcoin futures for the month of December, right? So if we have the Bitcoin futures for the month of December, you have the most open interest, right? So the most contract options are at the call price, right, of 19,000, or sorry, the call price of, well, the strike price I think is 19,000, and their call options, right? So people, there's at least 17 contracts that believe that the price is going to get above 19,000 within the month of December, right? That's them hedging their bets, right? And the thing is that they're paying a premium of about $9,000 per contract, I believe, for this call price, right? I think, if I'm not mistaken, the tick price was $25 per tick. So a tick is basically a point, so or $1, I believe. So each time it goes a dollar above, then you would get an extra $5. So you can basically do the math, right? So for every one tick, it's $5. So if it's 100 ticks, that's $500. For 2,000 ticks, that's $10,000. So if they're doing the call price here at 19,000 and it goes above let's say 19,200, you had this call option here, then you would make a total of $2,000 basically. But you would be paying almost $9,000 up front to make $2,000. Not too great of a risk to reward. What I'm guessing is that they're probably thinking that it's going to get higher than this 19,000. the question that's quite a large number. That's the thing, is that 19,000 is the strike price that they're going for. They're not going for these, which is interesting. They're not going for these smaller. I mean, there are some. There's one that's 18,600. But the premium is a lot higher. Well, the premium is a lot higher because more than likely it's going to get there, right? More than likely it's going to get there, and that's why they're paying for it. Versus 18,700, the premium is a little bit less, but it looks like nobody's going for it. For some reason, this 19,000, this looks like the premium is about $1,000 less. So I'm guessing that's why, right? $1,000 less, right? So the premium is probably a better price to pay. For more bang for your buck. So I'm guessing that's why they're all going for this call price here. 19,000, I guess, seems to be a good number for them to go for. What's interesting is that you do have 6 put options as well, right? At a premium of about 5,000, right, per contract. So you do have 6 contracts out there that do believe that it's going to get below 19,000. They're going to stay below 19,000 before the expiration of this contract, which is 12/23. Now, the thing is that with options, from my understanding, you have the ability to pull at any time. So you can just cancel the trade basically and take whatever money that you have and run, right? But the change here it shows is only negative 150. Let's see what the price of Bitcoin is right now. So price of Bitcoin at the current moment is, what is this, 18,900. So if it's at 18,900, right, and you're having a 19,000 put, you're pretty close to that, right? You're just under that, so you're hoping that it goes down a lot more. So that's why people are probably holding on to these contracts, hoping that it goes way below. I think that's why, honestly, I think that's why a lot of these contracts, especially somewhere around here, may not be available. They may not be available because a lot of people have closed them already. These down here, especially this 18.6 one, that call one, I'm sure that one is still open because they're hoping it gets even higher. That way they can make even more money. So whoever has those 2 contracts, maybe it's both the same person. As you can see, the change here is they're up 135. If you're at a put, you're actually in the red. So that's what's interesting about all this. Also, what is interesting is that when I go to look at the futures, right? There are people that actually have interest. I know it says CME futures December 20, but these ledgers over here, they also represent futures in the future. That being said, let me see here. So like this, see here you have BTG 21, BTJ 21, BTK 21, BTZ 21. I believe, no. Oh no, these are all, never mind, these are all current. So BTG1, BTH1, BTJ1, not 21. These are just ones. So never mind. That's not what I was thinking. I was thinking those were the future. But I did look at some of these, and it looks like we do have, especially one for December of 21. You do have five open interest calls. So you do have at least 5 people putting down options for Bitcoin in the future. So far, it looks like the high that people are aiming for is about 21,000. So, for the future, and the thing with options is that the farther out, the best way to make money with futures is the farther out it is, and the closer you are to the current price, more than likely you are to make more money, because more than likely it's not going to be near that price. So if we're at 19,000 now and somebody's putting a call option at 21,000, more than likely a year from now, probably Bitcoin's probably going to be somewhere around 26, 27,000, if not maybe upwards of that. So somebody putting in, an option right now, and let's see what the option price is. Let's take a gander. If we can even find it, I'm sure there's got to be the option price here. Let's go back. How would I find out this information? That is a good thing. I'm learning about all this as much as you all. Here we go. Option prices. Let's click to option prices here. American options. Let's go. Oh, here we go. December 21. Wow. Okay. This is insane. So the one option that somebody does have, they have paid a premium of $32,000 for one contract, and they did this just a couple days ago, right? Holy crap. And they're putting a call option above 2,300. I didn't know that was possible. So no wonder they're putting, okay, so yeah, I would probably pay, if I had $32,000 and I said, Bitcoin is going to stay above $2,300, yeah. I don't see how that can go wrong. That person's probably gonna make bank, to be honest. Generally people like to go closer to the price because it's generally a lot less money. See, like this right here, like you have a put option right now of $17,000 for the premium of 16,000. So you're saying in December 21, right? If you think Bitcoin is going to get below 16,000, you're going to have to put up $17,000 for that. The good thing is that if you're right, you're going to make a ton of money, right? Because you're really not putting up that much compared to what everybody else is putting up. And like I said, I think with every tick price, it is, I think, $5. Oh yeah. Price value of option point, $5. Yep, right there it is, right there. So yes, a point is basically $1. So let's say it's down to $14,000. That's $2,000 or $2,000 less times 5. That's what, $10,000. You put up 17,000 to make 10,000. Don't really know if that would be worth it or not, to be honest. I think that's why this guy who put down 32,000, for a call price of 23 was a pretty good idea. This doesn't make any sense to me. I don't know why you put down 37,000 for a put option of 22 at the strike. Unless I'm just reading these completely wrong, right? Unless I'm reading these completely wrong and I have no idea what I'm talking about. But more than likely, this is from what I have understood from options. This is how they work. I mean, you may have to double check me on this, but from my understanding, this is how they do work. As you can see, call premium totals over 1 million versus the put totals. As you can see, people are definitely banking on Bitcoin going higher than they are going lower. So if that tells you anything about where the price of Bitcoin is going, people going on the futures. Same here with the calls. Calls are about 4 to 1, right? And that's for this month. If we're going for next year, they're still about 4 to 1. It's just a completely different scenario, I guess you could say. Or is that 4 to 1? Let me see here. Yeah, almost 4 million. And the call premium is about 1.2 billion. Or is that 1.2 million? Sorry, 1.2 million. And sorry, my eyes are going crossed here. It's late at night, and the put premium is about 400,000, and that's for next year. If we go for December this year, okay, so it's not about 4 to 1. So this is about 5 million, and this is about 4.4 million versus 1.1 million. So whatever that comes out to be. But anyways, that is definitely what I wanted to show you guys. So if you go to barchart.com, this is where you can find all this glorious information. Also, what I wanted to show you guys was the future spreads. So if you don't know what a spread is, so basically when it comes to options, you're basically at a starting price, right? And at that starting price, you have to go so far to hit the strike price, right? In between the price that you're at and the strike price, you can lose money. So let's say you're at 18,000 right now, right? And you want to put up a put option for 22,000, right? So I don't see anything near 22,000. It looks like the closest you got is about 19.5. Right, so you're putting up a premium of about $7,000. And you're gonna say that you're gonna say, hey, Bitcoin is definitely gonna go above 19.5. So from the point right now, right, that we're at now, which is about what 18.9, is that what we said it was? Sorry, yeah, 18.9 until 19.5, right? You're basically, if especially as $5 for every tick, you're going to be you're pretty much down $7,000. I'm guessing that's what that premium means. So you're down that $7,000, right? And until you hit that strike price is when you actually start making money. Oh, let's go back to where were we? Where was the? Was this the spreads? Where did I miss the spreads at? Yeah, okay, I'm just talking right now. So yeah, you're at about $17,000. So maybe that's what that is. You're putting out a contract saying it's going to be above 19.5. It's at a little bit less than 18.9. So your premium is about 7,000. So you're 7,000 in the hole, basically, right? And once you hit that strike price of 19.5, that's when you finally break even. Once you get above 19.5, that's when you actually start making money. So just giving you that example, I think the spreads have a little bit more to do than just that. Let's see exactly what the spreads mean here. It doesn't really list like it would normally list, like an ask and a bid price. Like that would be your spread. I'm not seeing like an ask or a bid price on here. Now you do whenever you go to these, you see an ask and a bid, but you see they're not applicable. So it's almost like they're going in on the contract at cost. Because the ask and the bid is generally the difference in between. So there's there's the price that you're at right now, right? And then there's the ask price and the bid price. So the ask price is going to be higher than the bid price, right? So they're going to say we want 14,000, but you're going to have to pay 13.5 or something like that. So then your spread is already at $500, right? So you're already $500 in the hole, right? For the let's just say that's what it was for this bid and this ask, right? It was 13 or whatever it was I just said. So you're already $500 in the hole plus the 7,000 that you already are behind. So not only do you have to make up that 500 to get above that ask price, then you also have to make up that premium as well to get to the put strike price. Then once you get above the put strike price, then you finally start making money, right? That's basically how futures works with options. It's just an interesting game that I'm seeing here with Bitcoin. That being said, what I also want to do is go over to the chart. So let's go ahead and click on Bitcoin futures. Let's go back a bit and click on the December contract, and let's check out the chart. Now check out the studies that I was showing you. So the funny thing is that whenever I was talking about this earlier, and I was talking about the open interest, I thought it meant I was the person that explained this to me. He was just saying open interest. I thought he meant open interest rates. I didn't understand that he meant open interest contracts. So that just means how many contracts are actually in play. So for the month of December, there was no contracts all the way up until, or there wasn't very many anyway, all the way up until they started coming up in about early November, but then it came right before December, and then they shot up. Right, it looks like right here on November 30th. Is when they shot up, and they shot up hard, and they shot up as in puts. It looks like a lot of put contracts came into play. At least I hope they did, because if a lot of calls came into play, those people are probably still actually, well, if anything, what happened is that once it dropped, I would assume a lot of people put in a lot of call contracts, and that's where this huge green spike came in. A lot of people put in call contracts, thinking, oh, there was a huge drop. I put in a call contract. That way, But the thing is, I wonder what the strike price was that they put that in for. Because if it was somewhere right around here, it may not have been worth it just to get above here. Because to be honest, I think Bitcoin's going down. And I think a lot of other people in the rest of the trading community thinks it is too. It may not be going down for long, but it is going to be playing a very, very fun game of let's go sideways. Let's go sideways, and let's see where we can go. So right now, if we're looking at Bitcoin, I am looking at this at a 4-hour chart. Right, and I am a price action reader, so what I do is I basically read candlesticks. I read what the price action does. I look at it and see what it tells me that it's doing, if it's bearish, if it's bullish, if there are certain areas to what we call order blocks. if those order blocks have been mitigated, if there are breakers, have those breakers been broken? Those kinds of things. That kind of price action stuff I learned from Inner Circle Trader. He is doing an open enrollment right now, so if you want to have a mentorship of somebody that is probably the best price action reader in all of trading, he's been doing it for over 20 years, I suggest you go check out his videos. If you're serious about this, it's the cost of it is not going to be anything compared to how much you will make for the rest of your life. I've been just learning off his free videos, and I can't tell you how much it has helped me immensely, because 90% of the people out here in this world, especially in trading, people that are traders, not investors, but traders, lose about 90%, of the time, or at least 90% of their money. Investors, of course, are always putting money in. It grows. It kind of goes here and there. But if you're trading is a completely different game. 90% of the people out there lose money, right? So if you want to become a successful trader, grow consistently, make sure your account's always going up, make sure you're not over trading, things like that. Michael J. Huddleston, which is the Inner Circle Trader, best mentor you could ever ask for, is having open enrollment right now. $155 a month, $200 for the very last month, and then after that, you have free access to him for the rest of your life. I suggest you do it. I'm doing it because I want to retire probably within the next couple of years. No, that's probably not going to really happen, but probably within at least the next 10 to 15 years. That is my goal anyway. Yeah, everybody's got to have goals. So now, when I really look at Bitcoin here, actually, let me get off the 4-hour here and let me go to the daily. Right, so we all know we broke that high, right? Everybody knows we broke that high. I don't know why it has the high right here when it's obviously right here. Right, so that was the all-time high. It looks like there was nothing before that, or at least not really a breaker of any sorts. What a lot of people like to think is that once you get above the high, it comes back down, it's going to bounce off the high, and it's going to keep on going. That is well, I guess you could say if it closed above the high, then that's what they really believe. And it did close above the high, but guess what? That's not what happened. That is a false equivalency. Generally what happens next is what is called a turtle soup or a false breakout. So it did break this high, right? And I want to go to a 1-hour chart really quickly, just so I can kind of show you what happens. So, right, it breaks the high, and then it comes down and breaks the high again, and then it drops almost immediately, right? So if we throw fib on this, right, generally what happens is that you get this sense of a breakout, right? And then we call it a false breakout, right? And so generally what happens when I say false breakout is that you will get this, and then you'll get the breakdown, and then you'll get it coming back up again like it's going to break out. And it usually gets to about 71% to about the 80% retracement, which it looks like it did here, and then it dives, right? It didn't really dive. It's still going down, but I have a feeling that it's not going to make another high. Probably not, at least for another couple months. I think we've seen the top of Bitcoin that we're going to see for a while. It's probably going to flirt around and make you think it's going to go higher, and I think that's what a lot of people are banking on. Everybody's thinking jump in now before it's too late, before it takes off, yada yada yada. And that's, that's what's called the FOMO, the fear of missing out. Everybody thinks they're going to miss it, and it's going to take off, and it's never going to come back again. And it's just like every cycle. It's going to come back. It's going to come back to earth. Something doesn't go, take half a year to break 10,000. I don't know how long it took for it to break 10,000. But it took a very, very long time for it to break 10,000. Here, let's go back and look at this, because I remember whenever it did. Yeah, we're going back to June. It poked its head out of 10,000 once. I remember this. There were some friends I knew that were actually watching this, and they called this short, and they made crap ton of money out of watching this drop, because they knew it wasn't going to break it, or at least they knew it wasn't going to, jump out. They knew it was a false breakout. Right, so they made the ton of money just selling it and watching it go short. And then getting out, I want to say just below this low. That's usually what you aim for, is previous lows. And I can't tell you how much money they made. They probably had 2 lots on it, and it dropped a good, almost 1,000. And with 2 lots on that, geez, that was probably a good $30,000, something like that. I can't do the math in my head right now. Probably even more than that, to be honest. But here, I actually want to get off the 1 hour, even go to the 4 hour, because it was even before COVID, right? So I want to say this was the COVID. Everybody remembers the COVID drop. COVID drop was here. Even before then, it was just right. It was just right getting about to be above 10,000, and then it drops, and then the entire time it comes up, right? It touches, gets above that 10,000, and then dips below again, and then all of a sudden it gets above 10,000, gets to 13, right? I think it got to almost a 13, I want to say. Yeah, it was 12.4. And that was a pretty significant move to just go from, not even 10,000 to 12.4 in a matter of less than a month, that's for sure. But then it came back down to reality, right? And then it came back up. When it did come back up, I remember it hit the bottom of this, right? And that was part of some smart money price action there, right? A lot of people think it was support and resistance. No, not really that. It was more of a breaker. And the reason it was more of a breaker is because if you actually draw this through here, if we did one of these, right? If you look at where it went through, it just dropped straight through, right? So you have this low point, right? It comes back up, and then when it comes back down, it drops straight through. It doesn't come down here, consolidate in this area. It just drops straight through. And usually when something like that happens, there's a reason for it. And whenever it comes back up to that area, it's kind of like there's a void, or it's like there's a gap in price, right? So it basically, like you would see a gap, at the beginning or end of the week, in Forex or something like that. Anytime there's a gap, the price is always attracted to come back to it, but once it hits it, it reverses and goes the other way. That's kind of like what this is here. Whenever you see a huge drop like this that goes from a low point, and then it goes right through that point again, but there's no price movement in between here and there. It just basically, it's acting as a gap, right? So this comes up, it fills the gap, and then drops again, right? So kind of like a smart money play. And generally, whenever you do something like that, or whenever you're looking at something like that, you're looking at this to come up here and hit the gap, you would sell. And what you would aim for is you would aim for the most recent low that pushed for that high, right? So that would have been this low here. That's why I have these lines actually marked out, because I remember when this happened, I was looking at this low and I was thinking that it was going to drop below that. Sure enough, it did. Right, I had this low marked out too, just in case somehow it was going to come out to this low, but it did not do that. It did not come to that low. It did come to this low though, and then it moved on. And as you can see, there's a couple others that are kind of like this. You have this one right here. Here's another one, right? And let's horizontal array. And whenever these happen, usually, if it does do this, and it has a thing to where it comes down to a low point, pulls back up, and then drops down, and it drops down to that gap, and it comes back up to that point, usually it doesn't get above the high that it made before it made that drop, right? So that's a little lesson for you to learn, right? So as you can see, it didn't, right? It didn't get above that high. So you can sell as soon as it gets, to that place, and to that low point in that gap. You can put your stop loss at that high, because more than likely it's not going to hit it. What you do is then you look for it to actually make a low. Like I said, generally the low before it gets to the point to where it makes this high, but before it gets to it closes this gap, I should say. This one didn't necessarily do that. It got close, but these are one of the things where you just have to kind of pay attention to see if it is going to do it or not. It did actually make it below this low, but this low came after the fact that it closed this gap. But I want to say that is because, no, I guess I'm wrong on that one. I thought there was another one there too that it probably could have made, but no, that's not it. But, that was another trade that you could have made too. Here's one, it drops. You see another one to where, it happens again. You can sell. You just have to hold for a little bit, wait for it to drop, get out. And then now that it's done that twice, you pretty much have two gaps that are filled. So now it has moved its way back up. And then here is what I think here is where we all don't really understand what happened. I don't think any of us anticipated that as of October 20th, that Bitcoin was just going to shoot up like a bat out of hell. And I think we're all kind of scratching our heads about that. And that's why we're all probably going to see, at least for the most part, more than likely we'll probably see a lot of consolidation, some dips, maybe some comebacks, but I don't think we're going to see anything near this 20,000 again for quite some time, at least 3 or 4 months, something like that. It could have to do with the dollar. It could have to do with the dollar index. I've been talking about the dollar index. As you can see, it did hit that low point. We're looking at the dollar right now. I was talking about it yesterday. I said if it hit a low point and bounced back, I would say that what we're going to see in Bitcoin is we're going to start seeing a drop in Bitcoin. And that's what happened, right? So we hit that dollar. The dollar's starting to rally back. Now the dollar is starting to rally back. Bitcoin is kind of starting to slide a little bit back down. Same with Ethereum. A little bit close here to Ethereum. Here, let's go to 4 hours. It kind of looks like Bitcoin in a sense, but not a whole lot. It didn't break a record high or anything like that. I did mark out some key areas. It did break a pretty decent high. I think it hit a breaker, so it hit one of those things I was talking about, to where it hit a low point, went back to another high point, and then went through price really, really quickly. Let me see here. Yep. So now that I'm zoomed in here a little bit more on this, you can see what I'm talking about here. You have this. I'm in a 4-hour chart. Imagine this in a 15-minute chart. Probably something will happen is that it comes up, comes down, and then comes back up, and then this just drops, right? And this drops, so you have this low point with this gap that goes down through it. So it comes up, it hits this breaker, right? What we're expecting it not to do is not hit this high, right? And probably go down and hit the next low, or at least get close to another low that Ethereum has hit. Right here, you do have some consolidation. So if I am going to guess, and I haven't really looked at this, I just pointed out this consolidation because I think that's probably where Ethereum did kind of stop. Here, I'm just going to put some horizontal lines in here really quickly. Because generally that's what accumulation does. Yep. So it comes up, hits this accumulation area, and then starts dropping, hits the breaker, comes back down. I'm going to assume it's probably going to get down below here, because this is what caused it to come up and hit this breaker. So we still have some time for Ethereum to drop, right? I'm going to assume it's going to drop down below about 2100 before we do start seeing any kind of movement upwards again. Well, some significant movement upwards. Yeah, we're probably going to see it maybe consolidate a little bit more, but if we're actually going to see it start moving up, and try to make a new high, it's probably going to have to drop below 2100 first. So anyways, that's enough of my rants for now. It's been about 45 minutes, taking up way too much of your time, but thanks a lot for letting me talk and letting me vent. Again, my name is Ted. If you like what I do, give the video a thumbs up and a like. People that would need to hear this information, or you think your friends would like to hear this information, or go ahead and share it with them. And people that do see likes on other videos, they're more apt to actually check them out and watch them if they have a like on it. So hate to be a beggar for likes, but I'm gonna beg for one. Go ahead and please like this video. It would mean a lot. Also, if you like the content I produce, there is that subscribe button. You can go ahead and hit that, and the notification bell. I should be producing content like this more often. I kind of stopped there for a little bit, but now I'm getting back to some content that I do want to produce. Going to be more on the educational side versus me just kind of looking at charts and telling you what I think is going to happen. But anyways, that is it for now. I shall get out of here and get on and probably get to bed because it is fairly late. But you should always remember to wear your pants.